Okay, welcome everybody. Lenny Hayes here, just going to touch base and see how the markets have been tracking. So, last spoke on Tuesday. Since then, had a fair bit of activity, mainly due to the US debt ceiling situation, which looks like it has resolved itself. On the data front, we had some pretty disappointing data out of China yesterday, which did whack the currency a fair bit, including the Australian dollar, which dipped down below 65 US cents, since regained some of that ground to hover around 65. US dollar has been marginally stronger, mainly mixed. Also we touched on the verbal intervention that we saw in the Japanese yen currency. So, look, the big story out of today is that it looks like there's going to be an end in sight for the debt ceiling. The House passed the debt limit deal, so potentially averting and destabilizing US default. So lawmakers from both parties joined the vote for the bill today. It was passed pretty overwhelmingly, and it'll now be sent to the Senate, where it's almost certain that it will be approved. Now we're yet to see that yet. I'd say that'll happen tomorrow, but Mitch McConnell said that the vote will happen as soon as possible. So European stocks have risen early in the session. Futures steadied as investors were more optimistic after the House vote. Treasuries have dropped, largely reversing a rally in the previous session. And the US dollars rose while oil edges ever so slightly higher. At the moment, we're seeing equities, especially in Europe, looking a lot more attractive than US peers. And that's because they already reflect a lot of the risks to the downside. I think that a lot of that is priced in the European stocks, whereas in the US, there's a lot more uncertainty, and it seems like some of that premium we've been seeing in that price doesn't really reflect some of the potential downside that could be that could result due to an unwinding of some of these positions. If we look around the grounds, the euro, all the stocks 100 or stock 600 index is up almost 1% so far. Gold down 0.28%, sort of failed to gain much traction since it sort of breached that $2,000 an ounce mark. Interestingly enough, we saw US crude stockpiles rebound for 5.2 million barrels last week after a big drop in the prior period. So that came from the API, and it's said to have been reported by them. So stocks at Cushing rose for a 6-week, but OPEC Plus now faces a divided market. They're actually meeting this weekend, and keeping in mind the group has never cut within 3 months of similar action. So they've already done that earlier in the year. So it's going to be, if they're going to do it again, they're going to be making history, really. In other news, traders have actually started to unwind hedges against the risk of more Fed tightening this month. So there's a little bit of unwinding of positions in the June 23 SOFR options that expire 2 days after the next decision. Some of this comes after the comment signal to pause maybe on the cards. The comments we heard last night by some speakers may indicate that the Fed may look to pause at least for this month, but it's pretty likely that there's going to be a few more rates. It's not going to be likely that they're going to be more hikes, but I really don't think there's going to be any cuts coming. There may be 1 or 2 more hikes, but it's up in the air at the moment. That's about all. Debt ceiling, major story. I think treasuries are going to start strengthening somewhat. stock should have a pretty good session tonight. It's going to be interesting to see what the US dollar does. I think that might come off a little bit. Some of that risk premium will probably be unwound. And yeah, I'd say treasuries may rally somewhat, but yeah, at the moment they're down a little bit, and yeah, yields up. Anyway, thanks for tuning in, and we'll touch base next week. Thank you all. Lenny Hayes here from Trade Hall.